So here we are looking at Tesla's income statement. We're focused on just the income statement because that's what we're talking about in the text. And so we want to look at what does Tesla's income statement tell us. Tesla's in the news a lot of people are driving Teslas, that sort of thing. And so there's a lot of information out there. And this is the actual financial information that they reported, including their revenues and expenses. So this will show you that just kind of, you got the example in your textbook of Davidson Groceries. Here is a real life income statement from a company that you probably most likely heard of. So as you start, like any income statement, and notice first of all at the top it says statement of operations. That's another word for another way of stating the income statement. So don't let that throw you. It's the same idea. Those are interchangeable. Everything is in millions. That means they dropped 6 zeros. And we see here, as we're used to, there's 3 years given side by side for 2020, and they have a year ending December 31st. They use the calendar year, not a fiscal year. 2020, 2021, 2022, side by side to make comparisons, as we have mentioned earlier. So what we might notice, first of all, is revenues are first on the income statement, and Tesla chooses to break down multiple types of revenue, different things that they sell that earns revenue. So the first one is the biggest, and that is automotive sales. So their biggest source of revenue is selling cars. Okay. Then there's some credits with the new law for providing electric cars. And then they also get revenue from leasing automobiles, a much smaller number. But all 3 of those are related to automobiles or to cars, and supposedly soon trucks, that they have sold. So if we look at that, total automotive revenues for 2022 is $71 billion. That has, with 4 zeros, that's $71 billion. That's quite a bit higher than last year, 2021, which was only $47 billion. So that is quite the increase in automotive sales. Then they have some other types of revenue, mostly having to do with their solar energy and other things that have to do with that, batteries and that sort of thing. That is also included in revenue, and comes up to total revenues of almost $81.5 billion. So the energy is much smaller amount than the automobiles, as you can see. We can see it's not as important, but it also enjoyed a large increase over 2021, as did just the services and others, them installing things, that sort of thing, as for services. Now, we talked about cost of goods sold and the idea that the stuff that we bought and the cost of it is a first expense when we go ahead and sell it. So for instance, under cost of revenues, which is the same idea of cost of goods sold, cost of revenues of the automobiles that they sold was $49.6 billion. So the cars they built cost $49.6 to make, and they sold them for $67 billion. Okay, that's what we can see already. The cost of those that they leased was $1.5 billion. They leased them for $2.5 billion. Then you can see that they obviously want to sell and do sell for more than they cost to build. However, you notice on energy generation storage, the cost of that energy generation storage, the batteries and other things, is 3.6, and they only sold for 3.9. Not a lot of gross profit there, meaning they're selling it for just more than they actually paid for it or built it for. And same with the services. The cost of providing those services was 5.9 billion, and they sold it for 6.1 billion. So again, not a lot of profitability. But if you notice, last year, 2021, they actually sold their services for less than it cost them. So they're going the right direction, but they're still not generating a lot of gross profit. So their total gross profit is about 21 billion. The total amount they sold stuff for versus it cost them to make or build or buy that same stuff. All right, so about 21 billion is left to cover other expenses. That's the only expense we've talked about so far, is the cost of the actual items that they're selling. So then there's other expenses like research and development under operating expenses. So once they got gross profit calculated, taking this revenues minus the cost of goods sold or cost of revenues, getting their gross profit, then you start subtracting other expenses. Research and development, that's the idea of coming up with new concepts, new products. Research, okay, about 3 billion. Selling generally, getting everybody to buy, lots of advertising, running the headquarters, all those types of three, another 3.9 or almost 4 billion. And then some restructuring costs, things that they had to change and move around and such to restructure, another 176 million. So total operating expenses were just over 7 billion. So after those expenses, we have income from operations of about 13. That's twice what they had for income from operations last year or in 2021. Okay. Then they had some interest income for cash in the bank, earned income. They paid some interest expense. So often those are income and interest and income and expenses broken out as other, put down here at the bottom. We're not going to be too particular about that. And typically we can lump interest expense in with our other expenses, but they chose to break it out because that's something that's sort of separate from operating their business, as they might think. Okay. So we've got those expenses. We add income. Okay. Subtract expenses. We can think of that the same thing as gains and losses that was discussed in our talking about the income statement. Gains and losses are at the bottom. We add gains, we subtract losses. They're all part of net income, but they're separated because we want to make sure that you understand the difference between what is the main focus of our business and what is not the main focus of our business. So that's kind of what they've done with interest, income, and expense. So their income after those expenses and income is 13.7. On that, they had taxes. They call it provision for income taxes, the same thing as income tax expense. Because there's such a huge number of laws and picky things, we sometimes refer to income taxes as an estimate. That's what we mean by provision for income taxes, because no one is sure that they have lived by all of the laws, all of the rules, all the regulations that go into income taxes. So we say, okay, we think we've probably got about $1.1 billion of tax expense, and we subtract that and we get our net income. That is the end result of the income statement. Now, the other stuff below that, we're not going to worry too much about. We have earnings per share, calculations that help the reader, a shareholder, know how much of that income, that $12.5 billion, actually belongs to an individual shareholder by breaking it down by per share. How we do that and that sort of thing is for an accounting 151 class later on. But for now, we can just want to be able to go through net income at the end. Again, you want to compare it to the year before. You see that income was $12.5 billion versus $5.5 billion. That's quite an increase. You imagine if your income went from more than doubled in a year, you would that would be a very positive thing that you would look at, probably in a very positive light, to think that your income doubled over the year. And if you go back the year previous to that, I mean, in 2020, their net income was only $721 million. That sounds like a huge number, but for a company this size, that's not a lot of income versus $12.5 billion. Okay, that's just an enormous change and quite a positive change. And of course, the question then is what's going forward, right? Is this trend going to compare? We look backwards to try to predict the future cash flows to see if this stock is going to continue to go up, continue to be able to pay dividends. They don't currently pay dividends, or are they going to do that in the future because they have enough income to do so?